Hello everyone, this is me CA Vandana from Research and Advisory team of Texmin. Hope you all are doing well and your loved ones are healthy and safe. I welcome you all in today's webinar on key financial reporting considerations amid a second wave of COVID-19 brought to you by Texmin Publications. Before starting with our session, let me just give you a quick intro about Texmin Publications. It's a leading publisher on taxation and corporate laws in the country. We maintain the largest online database on income tax, corporate laws, GST, international taxation, and accounts and audit. Our products includes books. Our products includes books, journals, online and offline research platform, and tools for tedious compliances. Moving on to next, here we have some tips for the attendees. So guys, your mic will be on mute and you will not be able to speak during the entire session. However, you may post all of your questions in the chat box given to you right in the right-hand side. And all of your questions will be answered by our speaker either after the session or during the session itself. And once we are done with this session, then you all will get a copy of this presentation plus a recording link of this whole session once we are done with this. Moving forward, we have with ourselves our expert speakers, CA Santosh Malar sir, who is a rank holder, chartered accountant, having 16 plus years of work experience in accounting, auditing, taxation, and assurance services. He has extensively worked on IFRS, India's audit engagements, and conversion engagements for several large companies. And CA Vijay Vadvani sir, who is a chartered accountant having 18 plus years of progressive work experience in effectively reviewing the company's financial statements and analyzing the possible risk factors. He has also worked as a part of Big Four audit firms with a diverse skill set in client management, expertise in statutory audit, and he is also having a first-hand experience in working with a complex environment on IFRS with applicability of IFRS and Indian GAAP. So our whole agenda of this discussion will evolve around the few aspects. Very first, the key financial reporting aspects in the current economic environment, including the revenue recognition, employee benefit, share-based payments, impairments and going concerns, audit challenges and considerations in remote working environments, practical aspects and industrial perspective on key financial reporting considerations, accounting implications of new CSR requirements, and key COVID-19 reporting considerations for financial year 2021. So without taking much of your time, I'll be handing over the mic to our Honorable CA Santosh sir. So sir, it's over to you. Please go ahead.
Very good afternoon to all the participants. I hope everybody is keeping safe. So the background to this session for next 1 hour or so, what Vijay and myself have done is we have put together some of the major issues that we are facing, that most of the companies would be facing because of we are in the middle of the second wave of corona, COVID-19. So in this background, some of the issues like impairment, revenue recognition, inventory valuation, etc. have become increasingly challenging. So we are also in the middle of this audit season. So we are also in the middle of closing March 2021 financial year for our companies or for the for our clients. So this is also the audit season, which is we are in the peak of audit season also. So in next few slides, what Vijay and myself will do is that we will take you through some of the issues which companies ought to be focusing on in terms of accounting standards as well as under Ind AS. And also what we have done is based on our research, we have put together some of the extracts in some of the most of the large companies, listed companies, have already published their financial results by now. Of course, SEBI has also given certain extension, till 30th of June. But then we have the advantage of looking at some of the leading companies' financial results, and therefore we have in certain slides we have given some practical extracts of how companies have reported about COVID-19 or about impairment or about various things. So with that little background, I'll just start the session. So last year also we did a similar webinar around COVID-19 accounting, and personally I had thought back then that that was the first and the last time that we will be having a session on COVID-19 financial reporting aspects. But as we all know that since March of this year, since towards the end of March, the country has been, engulfed in this pandemic, the second wave of this pandemic. And although, most of the states, places like Mumbai and Delhi are, they say that we are, on the path of recovering, and the number of cases, etc., are reducing, and hopefully, things will be under control in next few weeks. But still, from an economic point of view, some of the projections I've put together, some of the projections from the economic growth projections or GDP growth projections from companies like CRISIL, Moody's, S&P, etc. The picture looks a bit grim. Of course, as compared to last year, maybe we are better off, but we are not as the growth trajectory is not as positive as it was before COVID. So I feel still these macroeconomic factors would have a role to play in accounting and financial reporting issues like impairment, inventory valuation, revenue recognition, provisioning, and so on and so forth. So point here is the macroeconomic scenario is still quite uncertain, and therefore the challenges under financial reporting. Vijay, would you like to add something here?
Yes, Santosh. So there's a difference in COVID-19, the first wave and the second wave. So during the first wave, it was considered okay if you're sitting at home and doing work from home, then work can be accomplished. But this time, it is altogether a different scenario. So, of course, a lot of challenges are there in terms of work, especially in terms of closing the accounts. So last time it was only the matter of how the audit will be done. This time it was a matter of how the closing will be done. Because this time it hits the people, to very large extent, But still, so work has to be done. So main thing is people first, and give all the support to your team as much as they require, and then keep them motivating. Of course, there are a lot of challenges which you just stated, like in accounting, impairment issue, going concern issue, physical verification, and of course, documentation review by the auditors. So these are challenges which are being faced by the industry as well as by the auditors. Yeah, Santosh.
Surely, Vijay. So with that background, let's now focus in the remaining slides on some of the specific issues on financial reporting. So let's begin the discussion with inventory. Under inventory, under both AS2 as well as Ind AS 2, the way we had last year, NRV, net realizable. So inventory has to be measured at less of cost or net realizable value. So in case of, for example, in case of perishable goods, or for example chemicals, oftentimes because of the lockdown, like last year, this year also the lockdowns in many states happened around March, and therefore whether the cost is higher than the net realizable value, that's a big issue in the current year also. So especially it's more, as I said, this issue is more pronounced for industries like who are in highly perishable goods, or even imagine the scenario for various hotels and hospitality companies who had significant stock of food in their stores. So because of the sudden, sudden increase in the number of cases towards the end of March, early April, there is a high chance that, whether as an auditor one has to look into whether, NRV is, whether it's whether there's any issue in terms of any diminution in value of inventory. Vijay, anything to add here?
Yeah, right, Santosh. So this issue is more for the perishable items, perishable commodities. But if you think from the perspective of COVID one wave, so after 3-4 months, so all the prices of all the items were gone up. Even in March 20, whosoever taken the NRV provision, so those were reversed in next quarter itself. Post July, so in second quarter, I mean all were reversed. Of course, in case of perishable, like you said, hospitality industry, there is still an issue.
Right.
And as compared to the last wave, as compared to this second wave, so it was all of sudden lockdown all over the country, and this time it was state to state.
I agree, Vijay. And I think one more differentiating factor is, if you recollect, last year the crude oil prices, there was a sudden shock towards the end of March last year and early April.
Right.
And there was a sudden decline, steep decline in the crude oil prices world over.
Right.
And because of which, if you recollect, some of the companies like, all these oil PSUs or Reliance Industries, they had to actually impair their inventory. So again, we don't have that kind of a scenario this year, but still I think there is fairly, the level of uncertainty still, it's quite, pretty much there.
Right.
The next point here from an Ind AS 2 point of view is that one thing, this is a bit of a tricky issue, that now this financial year, 2020-21 has been a very, yo-yo of a year. So the first 2 quarters we were in lockdown, most of the countries, most of the states in the country. The third quarter, that is the December quarter and the March quarter, were actually pretty good because, demand started picking up. The festivals, the festive season, brought a lot of increase in sales, etc. And again, as we, approach the end of the year, we had, this second wave. So from an inventory, when we do inventory valuation, one element of that is we have a loading of direct overheads direct overhead. So for example, depreciation of factory on the inventory that we have. Now, if you look at the standard, what it says is, if you have not been utilizing your factory optimally. So for example, if your utilization of the factory has been, let's say, for example, 50%. So you cannot load the factory depreciation to the extent of 50% on the inventory. So again, this is an aspect that one has to be, looking into carefully while closing March 2021.
Right. So this was more of issues during the first and second quarter, and this will be the issue for March 2021, where the inventory holding period is more than 120 or 180 days. But suppose in the industry where the holding period is less than 30 days or 30 to 60 days, then this is not an issue.
Right.
But of course, in the first quarter and second quarter, so the industry took the hit in the profit and loss account.
Yeah. The next issue, and this is an issue we faced last year for the first time, the issue of physical verification of inventory. Basically, because of the sudden declaration of lockdown and because of travel restrictions, many companies were not in a position to carry out their inventory verification process. Generally, many companies do this verification of stock towards the end of the year. There are other little more matured companies who do it during the year, say in December or September. But most of the companies, in my experience, do it towards the end of March or middle of March. And because of the lockdown announcement last year, we had this issue that how do auditors actually give a comfort on the inventory, especially because Caro requires the assertion of a specific this thing, that whether physical verification has taken place, etc. So of course the institute came up with an advisory as to what can be done as an alternative. The auditing standards state that an auditor need not be present at the physical verification process if it's impracticable, and any health or if there is a lockdown and if there is a threat to health, of course it's an impracticable scenario. So alternatively, the institute said that in its advisory said that you can do a roll forward process. So अगर आपने December में किया है stock verification, you just roll it forward to March. Or
Right.
let's say if you do it later after March also, you roll it backward to again March. That was one process, but again the premises के आपने कभी तो साल में किया है उसका ये physical verification. The second alternative broadly which the institute came up with is that ठीक है, आप you can leverage on some of this technology platforms like Zoom or Skype or something, because you have the advantage of doing it on Skype. And again, there have been some practical issues there, because many of the warehouses or factories are at remote places, may not have the best of the internet connections. So at least I, as an auditor, I have been challenged at various clients where their warehouse or their regional office would be somewhere in a very remote place, and internet connection nahi hai, या camera का resolution बराबर नहीं है. So these are some of the technological challenges that one faces. And then Vijay, the issue is there are also from an auditor perspective, who controls the camera, can we identify the location. So if I'm being shown boxes or cartons of stock, वो डिब्बे भरे हुए हैं या खाली है. So I mean, of course, virtually doing it is an alternative. We are just trying to do something, but there is no replacement for actually being there. So again, that is a big challenge. And this year also, I think the scenario has been more or less the same because of the second wave. Your thoughts, Vijay?
Yeah. So Santosh, actually this lockdown in COVID, it has taught us that even audit can be done virtually, and your physical verification also can be done virtually. Right? There are various, I will say, controls which should be there if we are doing any virtual physical verification. So right, so like I can say during second or third quarter, so companies might have done physical verification physically. And you're right, as per the guidance issued by the institute, now we can use that roll forward procedures. But even suppose if a company hasn't done any physical verification any time during the year, or even if they have done the verification, the documentation which should be there as per the auditor's requirement are not there, then they have done virtual physical verification. And again, in terms of virtual physical verification, see this relationship between the auditors and the client, like in your question, can we identify empty boxes? So again, this is the trust factor between the client and the auditor. So I don't see now after the first wave that there is any concern in virtual physical verification. Now the teams are experienced and they very well know what all the controls should be there before doing the virtual verification. And even both the teams, I mean the client teams and the auditors teams, now both are experienced.
Sure. No, absolutely. Because last year again we had this issue, and many proactive management and auditors have actually availed. I'm aware of a few cases where during end of January, early February, many companies have done their physical verification.
Right.
So I think that kind of process. I think so. I mean, there is a theory that third wave bhi aa sakta hai. So I think it's better to, once things have, normalized or near normalized, I think good to get it done at the earliest.
Yeah.
So
Even,
Vijay, yeah.
so even before the second wave comes with full speed, even some team members were reluctant to do any physical verification.
No, absolutely. I mean, one of the biggest challenge today in auditing profession, in my experience, Vijay, is that first of all, availability of staff, anyways, is was limited, and now because of this health hazard, many of the chartered accountants are now based in their hometowns. So getting them to do the physical verification
Exactly.
is a big challenge. So availability is resource. In fact, many firms, many managements have actually, only for the purpose of physical verification, they have engaged or hired some, local firms or
right.
local consultants.
Right.
And that has been a trend which we have seen.
So mixed approaches are going on.
Yes. So a few glances at some of the extracts of what companies have done. This is what I was talking about. Reliance Industries, in its March 2021 financials results, they have in fact classified certain gains and losses as exceptional. So in the notes to the results, they have given the breakup, and one of the items is what I was referring to earlier, loss. Item number D, loss due to substantial fall in oil prices that they had last year. Of course, this year they don't have that, so they have reversed that. But again, even a company like Reliance, during the last few months, they have raised a lot of money from other private equity players or other investors. But again, this issue of impairment. Of course, now I'm a little bit digressing into the next issue of impairment, but this issue of impairment is also something which it's not necessary that only the non-performing or some of the smaller companies will face. Even companies who are otherwise doing very well. I mean, Reliance, the results was very good, but despite of that, they also had some impairment issues. So again, even when a profitable and a large growing company may also have this issue of impairment, whether it is for non-financial assets or also for financial assets. And then there are a few examples of now these are abstracts from auditors reports of March 2020. Couple of examples where companies, auditors who were not able to carry out the physical verification, or they were not able to witness the physical verification, they came up with these emphasis of matter in the auditors report, in their reports. This is the report for March 2020 that I have reproduced. So again, from an auditing standard standpoint, SA 501, it requires you to have good evidence about the inventory balance, and the institute or the Ministry of Corporate Affairs, there is no relaxation so far as the stringency of auditing is concerned. So even if we don't have the best of the environment at the moment, and if we are forced to do remote audit, still there is no relaxation so far as the quality of auditing is concerned. So it's very important to note that if in a scenario, if you have not in a position to do, if the company or as an auditor you have not done any physical verification, then one must seriously consider how reporting will be done in the auditor's report. And there have been instances where auditors have actually also mentioned it in emphasis of matter section in the auditor's report. You're back, Vijay. So anything to add here, Vijay?
Yeah, so in last year, so many of audit firms put such kind of MOE in their audit report, which were again, I mean, it was a question mark whether such kind of audit observations or MOE should be there in the audit report or not without any qualification. But many of the audit firms avoid such kind of a statement. Because this was the situation more or less in every company.
Very true. Very true. Vijay. Okay, so the next issue is on impairment. Basically, impairment also, again, this is an example of Tech Mahindra, who in their March 21 results had this note, the results had this note on impairment loss with respect to one of the subsidiaries. So impairment, as we know, Ind AS 36, it deals with non-current assets, non-financial assets. Of course, for trade receivables and your loans, etc. Ind AS 109 deals with the we have expected credit loss approach. Ind AS 36 deals with the normal assets, the non-financial assets, so fixed assets, investment properties, etc., intangibles, goodwill, etc. So again, one of the emerging themes since last year is goodwill impairment, or impairment of subsidiaries or impairment. So if you look at some of the sectors, it's more pronounced in some of the more susceptible sectors like hospitality, for example. We all know that hotels have not been having the best of the occupancy last few months. Aviation, again, if you look at the financial statements of Indigo or SpiceJet, you would find a lot of disclosures, a lot of discussions around how they have tested the impairment for the purpose of their fleet. So again, impairment is something which one has to look into very carefully. Tech Mahindra, despite again being in a company, being in a sector which is relatively IT and technology sectors, very it's in fact prospering. It's not even affected. Despite of that, there can be circumstances where in certain pockets you may have impairment issues. So again, this is one example of that. Before I come to Vijay, I'll just also share this example of Tata Motors. I think a couple of weeks back they also had their results, and the results had this note with regards to, of course, reversal of impairment. So last year they had done impairment for their passenger vehicles cash generating unit because of the COVID, because of the forecasts and cash flow projections. And this year it seems that they have actually been little more optimistic about the projections, and they managed to reverse some of their impairment chart. So again, I thought this was something which is worthwhile. Vijay, any thoughts on impairment?
Yeah, again, for impairment, so in case of large organization, in case of old organization, so whosoever created provision in March 2021 only on the basis of COVID impact, so I believe those would have been reversed in the second or third quarter, because second, third and fourth quarter rather, the second, third and fourth quarter were very good quarters. So no one expected that these quarters will be so good. And I believe third or fourth quarter would be one of the best quarters in so many years. So of course, this time also, I mean, so the people are raising issues on impairment. But again, I will say, so we need to see impairment objectively, not only subjectively. Of course, there can be impairment. Suppose if you have already committed a new acquisition, there is a commitment, or if you have already, say, installed a plant with such kind of product which it is very difficult to get production during this lockdown time, there might be delay of 1 or 2 years.
Yeah.
But you say it needs to be impaired. Of course, auditor will always say that it needs to be impaired because there is no visibility for next couple of years or maybe a year for 12 months. But still, I see we need to see objectively the business perspective. We need to see others.
No, absolutely. That's a good point, Vijay, because I think many a times, often auditors forget the point that this is all said and done, this is a temporary phase. It's not
Right.
that the business is closing down or something. There will be life beyond COVID, right? So this 5-year limit that India 36 gives. So if you look at the overall picture, things would bounce back once, and we have seen this last year also
Right.
during the Q3. Things actually did, the growth was there substantially. So I
Right.
think that's a very good point. And one should not get lost in the technicalities of Ind-AS 36 or AS 28, because those things are ultimately, they are estimates. It's not that it's a sacrosanct thing. So I think it's a good point. In extreme cases, of course, there can be going concern issues where the survival of the company itself is at stake. And in that case, of course, we have we have a lot of advisory from the institute, as well as going concern assumption is one of the fundamental assumptions in the financial statements. Some of the factors that one needs to consider have been listed here. Of course, that lack of growth in economy is one aspect. But even, let's say, if you have significant loans, and this is an issue which is very well pronounced for, let's say, companies who have high loans, borrowings, debts, etc. And those who are at the risk of getting classified as NPA. Of course, that Supreme Court order where there was a relaxation that you don't count the moratorium period for the purpose of classification, that is there. But then, from a going concern perspective, one has to really look at it objectively. So again, here I have pulled out some of the examples like EIH Associates, East India Hotels, who had this note in their, March 2021 financial results. And they did, a significant, they did what I would call a stress test of their going concern assumption, and they gave this note. And they also mentioned, what I like about this note is they mentioned what are the mitigating factors. So if they have access to availability of liquid funds or access to investments in mutual fund, so it's important to have this note in the notes to accounts, so that the readers, the stakeholders, the regulators are aware that इन्होंने going concern का सोचा है, they have not missed out on that issue, and they have actually assessed it and brought it out in a nice note. So I think that is important to kind of cover in the I think in this current economic environment, the most the best advice that you can give to your client is basically that let's be as transparent in the notes, in the disclosures as much as possible, because obviously things, the entire environment is uncertain. So it's best to be transparent in this current economic environment. Any thoughts, Vijay, on this?
Yeah, this is again a matter of emphasis, I believe. This is not a qualification. And of course, in hospitality industry, definitely there was a challenge on going concern. But again, we had seen improvement in Q3, Q4. So everyone was on vacation. So there was no hotel room in Q3, I remember, during Diwali time and Dussehra time. So again, depends on situation to situation. And so going concern would be more affect to the companies who are supplying to such kind of entities. Because those are into perishable products.
No, absolutely. And I think one way of doing it, and if I can, jump to the next one. No, not this one. So one way of doing this, Vijay, can be like a base case scenario, a worst case scenario, and a best case scenario.
Right.
So in impairment also, I've seen companies now changing their method, because cash flow projection एक ही जैसा हो नहीं सकता.
It
can be, it's an estimate.
Right.
So मैं ऐसे करता हूँ कि estimate में बनाऊंगा A, which is the best case, B, which is the base case, little more realistic, and see which is the worst case.
Right.
मैं probabilities लगा सकता हूँ. तो हर एक के हिसाब से I work out the VIU, the value in use, and then I ascribe probability for each scenario. Okay, depending on what's my business and how optimistic or pessimistic the management is, and उसके हिसाब से एक मैं average कहीं ना कहीं मैं एक value in use का projection लेके आऊँगा. I've seen increasingly, be it for expected credit loss, be it for India's 36 impairment, be it for going concern, ये approach काफी अभी popular हो रहा है.
Right.
in my experience.
And then companies always make long-term I will say projections, short-term projections. So all those need to be considered. So I'm reiterating that it should not be only basis of the COVID lockdown. So you need to understand the business perspective. Of course, many of the companies, because those were majorly into the loans and were not able to pay loans, those might be bankrupt now. So the issue would be the companies who are supplying products to those companies.
Right.
So this is a chain. So it cannot happen that the main entity is still going on, and then you are saying that the chain companies should be given the going concern issue. Of course, there is an issue in the main company. Then, of course, in the whole chain will get disturbed. It is not only a single entity. Suppose if today any OEM goes bankrupt, so it is not only that particular OEM, it will be the whole chain.
The whole ecosystem would get.
The ecosystem will be disturbed.
True. Okay, moving on to the next issue of employee benefits. Both Ind AS 19 and AS 15 require defined benefit obligation to be recognized based on the net of present value of defined benefit obligation less the fair value of the plan asset. So in case of funded plans, if you have plan assets, you would have to reduce from your liability the fair value of the plan assets. Due to COVID-19, there would be impact on the fair value of the plan assets. Okay, that is, because we know that interest rates have been significantly declining. So that would have an impact on the fair value of the defined, benefit obligations as well as plan assets. Also, some of the companies have had to terminate some of their employees. So, and in the later slide, we also have examples where, there has been restructuring vis-a-vis, employees, or, there have been VRS schemes. So we'll see those examples. Also, there can be adjustments to accumulated compensatory leave of employees for determining employees' leave. So the trend of people availing the leave, etc., that also one has to look into as to it may so happen that since all of us are working from home, maybe people may not take that leave and therefore it gets carried forward. I mean, in whichever organization allows it to be carried forward, it will get carried forward. But it may also happen that because of, in the second wave, so many people, unfortunately, so many of us are actually catching the virus or family members or something. So you may have, a trend where companies allow their employees to actually go on leave and, and so on. So the trend of, the way you would project your employees availing your leave would also have to be relooked under, post this COVID-19. And lastly, the point here is ESOPs. Now, many companies have ESOPs, employee stock options. And because of the, ESOPs, because some of the companies may have been struggling with, liquidity, the ESOP component of, companies, especially listed companies, may actually increase. And that is one trend which one can probably see there. Any thoughts here, Vijay?
Yeah, right, Santosh. So depend upon organization. Many companies have changed their leave policy. Many companies have changed their. So many of some of the companies I know, they have come with the VRS scheme in private organization. And of course, so that one-time impact would be there.
Would be there.
Yeah, would be there. But people are aware of of those schemes. So before launching such kind of schemes, normally now management also see what would be the impact in my profit and loss account.
Right.
Rather, they always try to show it as an exceptional item, or we can say it is a one-off item, so that it doesn't affect normal profit and loss.
Sure. Couple of real life examples we have pulled out from Britannia and ABB.
So this is a VRS scheme. This is a private company.
Yeah. Example of VRS schemes. And then in ABB also, one of the division they had to, they had a VRS scheme.
Right.
A lot of companies do also, nomenclate it. They may call it something else. So again, that is, nothing but a VRS in a different kind of a form.
Right.
They may call it as restructuring or whatever. So one example is that of Castrol. In the December financial statements, they said that redundancy cost include a one-time cost of 19 crores towards organization transformation and restructuring program. So again, it's a bit like a kind of a termination. One can look into it. Okay, so with increasingly with the COVID-19 and because of the logistical issues that we faced, many companies faced last year, it is very common that one comes across companies, actually, having force majeure clauses. So contractual contractual penalties. So if I'm not able to, supply to my customer, and if there is a penal clause in the customer agreement, then I am, the customer says that I'll have to, enforce this because I'm not, you have not supplied me. So again, this is something which is a very, a common issue in this current environment, that contractual, terms, because of not being able to, meet up with those contractual terms, many, litigations and many, I would say contractual these penalties have been enforced. So again, in Ind AS 37 as well as in AS 21, one has to also assess whether there is a onerous contract. So जब भी मेरा एक contract है, जो मुझे the cost of honoring that contract is actually higher than the benefits that I'll get from the contract. So for example, if I have a let's say a store, let's say if I'm a retail company, I have a store. I have let's say many stores, but because of the nature of retail, of my retail being let's say non-essential, मैं उसको फिलहाल कुछ चला नहीं रहा हूँ. I'm not able to actually open the store. But मेरा let's say rent चालू है, मेरा भाड़ा तो चालू है. So in that case, what happens is it can get classified as an onerous contract because I'll have the cost, but I don't have the benefits flowing from the stores. So again, that is something which one has to look into. Vijay, your thoughts?
I believe so this contract termination penalties and clause of force majeure. So this was reviewed and thought many times during the first wave.
Correct.
Because this was all of a sudden was the point of, I will say, critical point that point in time. So the people want to play on both the sides, from seller side also and from buyer side also.
Right. So
it was reviewed and thought, in the very first wave, and people took the benefit also. So if you're the seller, so you want to avoid such kind of penalties. But if you're the buyer, so you were there, you have to comply this, otherwise you need to pay this kind of penalty. So people try to play on both the sides. But now I believe after the first wave, so all the contracts were modified in many of the organizations. And I don't see, this should be an issue. Of course, in terms of contract where the parties are international parties, where you cannot go and then modify the contract. Then, of course, there would be certain onerous contract also. Or you say any committed acquisition, and you have paid say 5% or 10% of your amount, and now so you are in dilemma whether you can recover this 5%, 10%, or you need to pay the total 100%.
Right.
And in some of the contract, there are clauses where you cannot back out. You have to pay this 90%. So of course, in terms of international contract, still these are the challenges. And but in case of Indian contracts, I believe most of the contracts were changed or modified. I mean, during that time.
I think one common trend, Vijay, I agree. One common trend in my experience would be force majeure. When we say force majeure,
Right.
the definition of force majeure pre-COVID was like, act of God.
Right.
Now, because, a lot of lawyers and legal experts argued that this pandemic is not act of God, but this is, so to say, a lab, I mean, so
Yeah, maybe might be anything. Yeah.
it's a human thing. So therefore, one has to show that force majeure in the recent agreements that I have seen is force majeure ka jo definition hai, that has been broadened to include the
Exactly.
pandemic also. So I think that's
So they've incorporated all the terms related to any health issues.
right. Couple of examples here. Again, Indigo in its results. Now, I picked up one of the older results, but I thought this is a good example, where again they had a contractual commitment issue with regards to one of the OEMs for supply of some new engines. So again, they gave a very detailed note, and I think they have been giving this in most of their results in last few quarters, where they emphasized on the fact that they are still looking into it from a legal perspective, and they have not recognized any asset on account of the non fulfillment of the contract. And then you have examples of onerous contracts. Tata Motors gave this note where basically they mentioned that in some certain supplier contracts ranging from 5 to 10 years, which had become onerous as the company had estimated that it will procure lower quantities than committed, and the cost will exceed the future economic benefits. During the current year, again, they revised the volume outlook. So generally, many of these contracts would have a minimum, take or pay obligation, where if you don't take, certain minimum quantities, आपको penalty पड़ सकती है. So this is looking a bit like that. This current year also, they again re-examined that and, did a true up of their provision towards onerous contract. And of course, they also have, got into this restructuring, one-time restructuring of their JLR, unit, and they took an exceptional charge of about 14,994 crores. This, of course, was, the front page news in many business newspapers. So again, they did a significant impairment of some of their assets, restructuring, cost provisioning. They did a one-time provisioning. So again, a very significant accounting impact of this COVID-19.
Yeah, and Santosh, we are seeing now this from the COVID perspective. There might be cases where this onerous contract or restructuring impairment going as an issue are there not because of COVID, but otherwise also.
Yeah. Yeah, so even before COVID, I think there was a fairly skepticism about economy being on a decline,
Right.
and COVID actually took it to the next level,
Next.
further down. So I think you're right. It's just that these issues were always looming in the environment, but just COVID के वजह से वो एक धक्का लगा है उसको.
Right.
I take your point. Coming to expected credit loss. Now, just to very quickly refresh, what is the concept of expected credit loss under Ind AS 109? Basically, we are talking about not the provisioning based on past aging analysis. We are talking about a company which has to develop an expectation that today, if I'm dealing with, let's say, real estate companies, let's say, for example, I'm a cement manufacturer, like let's say ACC, and if I'm dealing with, my customer base comprises significantly of infrastructure and real estate companies. Today, I know that there is a slowdown in the market because of COVID and lockdown. So I don't basically wait for the actual delinquency to happen tomorrow. I develop an expectation that because of the current issues in the market, the slowdown and the liquidity issues in my customer group, what is the likelihood, what is the chance that मेरे को पैसा जो है मेरा जल्दी मतलब on time recover नहीं होगा. So if I believe that there will be significant delays in my realization, I don't wait for the actual due date to happen. I make a provision today itself. So it's the expected credit loss model. This expected credit loss provisioning, this is one of the toughest, in my experience, this is one of the toughest area that, last few quarters we have seen. And it's not just for India, across the world also, because March 2020, the issue was that, I don't know how bad the situation is. So I need to do some kind of crystal gazing also इसमें कि future outlook में मेरा कितना पैसा डूबेगा, कितना delay होगा, etc. Now, last year, the kind of uncertainty that we were, seeing was, unprecedented, and उसका एकदम accurately किसी को nobody had a good answer as to how bad it will be. How much additionally I should make a provision towards ECL? Should it be 5%, 10% based on future outlook? This year again the issue is there. ACC has given this note in its results. So again they have also said that realization from receivables from state government of incentives, usme bhi they are expecting delays, and therefore we know that some of these benefits like the incentives and even the export benefits, MEIS, etc., काफी time से pending है. So again one has to really look into whether provisioning करना चाहिए या नहीं करना चाहिए. The issue is much more difficult for NBFCs. Particularly because of this moratorium that RBI has given. So in NBFCs, basically, if in normal scenario also, ECL, expected credit loss provision, was a difficult issue because of various things like lack of data in India, lack of very clear economic trend, etc. In the current scenario, it's become much more difficult, and many companies, many NBFCs have actually said that भले ही मेरे ECL के मॉडल से मुझे इतना ही provision आ रहा है, still because my significant number of my borrowers are in the moratorium or have availed the moratorium, I will make a higher provision because I don't know the trend, because I don't know the repayment. EMI सब लोग नहीं pay कर रहे हैं क्योंकि moratorium था. So last 1 year का trend is something which is missing here, because since the borrowers would have taken moratorium benefit, I cannot develop a trend as to whether these borrowers are good or are they struggling. So therefore this is a very tricky issue for NBFCs. NBFCs have adopted Ind AS, so ECL is only there for NBFCs. Banks are yet to adopt Ind AS, and therefore they would go by the RBI guidelines. So इसमें मतलब NBFCs are in a very typical scenario here that they don't have any bank ka trend to look into. So again, it's a very difficult scenario for NBFCs so far as ECL, estimating the ECL provision is concerned. So the way Mahindra Finance has done, if you look at the second paragraph of the slide, they have taken an additional hit of ECL overlay. So भले ही मेरा normal ECL model के basis पे I may have got whatever provision, but because of the non-visibility of the borrower's status because of this moratorium period, I will say that I'll have an additional hit of, in that case, it's 906.36 crores based on a conservative approach. So I think this is an approach which many companies, many NBFCs particularly have taken. Your thoughts, Vijay? on this?
Yeah, so it is not an NBFC company. So there are companies in commodities market where the credit period they gave to say farmers and also 120 days to 180 days. So those most of the entities are not listed entities, but again, so this issue ECL issue is prevalent there in very big way, because already their credit period is 120 to 180 days, and during this period especially you cannot go to the farmers or to the labor that you need to pay this amount. So there it is an issue at very at big level.
Right. No, absolutely, Vijay. Vijay, I think we have a few questions. Let's maybe if we can take a couple of questions. Vandana, do you want to read some of the questions that we can perhaps answer?
And before taking questions, Santosh, so it is good that the new requirement of CARO and Companies Act are suspended for a year.
Yeah.
So suppose the auditors and clients are facing challenges even to close the audit in a normal manner. So if these things were there, CARO and the new Companies Act requirement, then it had been again a difficult situation.
No, absolutely. But one requirement on Vijay, again, before taking the questions, one thing that I wanted to specifically, mention here is, this CSR, the new CSR amendment that has come through, that is effective straight away, right? That's effective for this current year also. So now the provision, under 135 is that I have to, so whatever my CSR obligation based on my last 3 years average profits, 2% of that I have to spend on my CSR activities. If I don't spend till 31st of March, I have to contribute it, to one of the funds, mentioned in Schedule 7. So like, your Prime Minister's National Relief Fund, etc. If I have ongoing CSR projects, so many companies have an ongoing project like, education or healthcare or whatever, then I don't need to directly contribute it to the funds, but I can park it in a separate bank for, 3 years. And, I have to make the transfer of the unspent amount in the scheduled bank within 30 days. And if within 3 years also, if I don't spend, then I have to again, contribute that money to the unspent money to notified fund. So basically the government is saying that this is an additional tax in a sense that, you have to spend money either on your own, or if you don't spend on your own, you have to pay to the, one of the funds, the PM cash funds, or, one of the funds in Schedule 7. So from an accounting point of view, CSR, if you have any unspent CSR as of 31st March, 2021, you will have to make a provision towards it, which is a big change from the institute's earlier guidance note. Of course, the earlier, legal position was either you spend or you explain in the financials why you have not spent. So it was not, so to say, compulsory. Now it's like you have to spend. आपको पैसा तो CSR में लगाना ही है. So that's why from an accounting point of view, it becomes an obligation. So that is one thing which one has to, be careful about. Second is in terms of if you have any capital asset. Okay, so if let's say, for example, if you have a hospital or a let's say school building in your balance sheet, now you cannot hold that legal ownership in your in your name. So it has to be transferred immediately to a Section 8 company or a self-help group or a public authority. So for example, abhi ye Infosys ne ye note diya hai in their results saying that that they will be transferring their some of their capital assets, CSR assets, to one of their Section 8 companies. And therefore, this is something also one has to be careful about.
Right. And these compliances were to be fulfilled before 30th of April in case of ongoing project.
Right. So, so I think we have a couple of questions. So maybe I can. So, so Vijay, I have a question. What should be done if inventory count is not carried out during FY 2021 due to COVID? Should auditor report be qualified? You want to have a go at that question?
So definitely, as a client, so no client would want to get qualification only because physical verification was not carried out. Of course, alternate procedures. So suppose like earlier we were discussing, if verification was carried out during the year, anytime during the year, then roll forward can be done, or virtual physical verification. Still, if it can be done, and then you can do the rollback. And third thing is again alternate procedures. If the physical verification was done somewhere in say last year, and if you can do the roll forward till now and show the documents, purchase, sales, consumption to the auditors, and if auditors are convinced, then it should not be qualified. But again, that call has to be taken by the auditors.
Absolutely, absolutely. I mean, it all depends on how comfortable you are with regards to inventory balance. If
Right.
historically you have not seen much of an issue with regards to inventory, client के inventory records ठीक ठाक हैं, and if the control is good, then even if you have not performed the physical verification, or if you have not been present in the client's physical verification process, it's still okay. You can still carry out some alternative procedures. जैसे institute के advisory में भी बोला गया था कि alternative procedures like roll forward etc. can be done. But it all depends, as Vijay said, on the comfort that you have. You may not be a first-time auditor. You may have audited this company for multiple years. So if you have been fairly comfortable with the process and internal controls around COVID, around inventory, then I think alternative procedures karke you can probably get some comfort on the inventory balance. Okay, there is a question on CSR. Vijay, I'll just read it out. CSR amount which was not provided for, not spent earlier, say FY 17-18. Now, unspent provision will include all such amounts or only for FY 2021. So I think the question, Vijay, here is that do you have to make a provision for the backlog of CSR, unspent CSR only for FY 2021? और पहले का भी जो अगर कोई बैकलॉग रहेगा आउटस्टैंडिंग जो आपने नहीं खर्च किया रहेगा, will it be applicable and will you have to make a provision for that also?
I believe there was some FAQ also, or maybe we might take some opinion. So because this notification came in Jan 2021,
correct.
So it is so it will be applicable prospectively, not retrospectively.
Correct. I agree. That's my view also. That because as Vijay said, it's not something which. So the law before 22nd of, I think the date was 22nd of January 2021.
Right.
Before that date, the law was either you spend or you explain. So if under that law, if you have not spent anything, there is no further liability. This is only for FY 2021. So you don't need to worry about past backlog. In fact, in one of the recent clarifications, they have said that if you have spent March 2020, if you have contributed extra amount to PM CARES funds, not that many companies would have done that, but let's say if you have, then you can carry forward that for next 3 years also.
So there is a exemption for 1 year, I believe.
Yes. So one thing is that in CSR now, if you have done any extra spending for 1 year, for a particular year, if the board approves, then you can carry it forward for 3 financial years also. So again, that would result in recognition of an asset in the books. It can be a prepaid CSR or something like that. Okay, let's take this question also. There's a question related to factory utilizing in the inventory and how to realize if stock is utilized fully 100%. Inventory valuation should be done on the basis of NRV. Not very clear about the question, but I think it's related to inventory with regards to our point of utilization of the capacity. So I think the question, in short, what I understand is how to check whether the factory has been totally utilized or not. So I think here basically you can look into the the records of the factory, basically what is the consumption of electricity, for example. अगर फैक्ट्री बंद ही पड़ा है कुछ हफ्तों के लिए, तो आपका उस इलेक्ट्रिसिटी फैक्ट्री लॉग में कहीं ना कहीं आएगा. So that can be one evidence. Any thoughts, Vijay, on this?
Yeah, you can check from many ways. I mean, one is of course production record, then of course
Right.
your labor record, then
Right.
electricity record.
Right.
That can be checked. But I believe the question here was about the inventory valuation. So when inventory should be valued, consider the normal production levels. So that whatever the extra overhead are there, so those are expensed out.
Yeah. So to the extent there was normal production, only to that extent I can load it on the inventory valuation. Right. Anything in excess of that has to be charged to P&L. I cannot load it on the unsold inventory at the end of the.
Right.
Another question on CSR. What should be done for CSR projects sanctioned prior to 2021? Whether the amount spent on those projects during FY 2020 during the FY be considered as CSR spent for FY, and would the unspent amount with respect to the project be transferred to unspent account, considering that the project was considered as ongoing 2021? So again, a long question. What I understand, Vijay, here is the question is CSR. The project was sanctioned by the CSR committee of a company prior to 2021, but whether the amount spent on those projects during the current year should be considered as CSR spend, and I think it goes based on the actual spending rather than on, yeah. So it would be, at least in my view, it would be considered as part of the current year's CSR spend.
Exactly.
It doesn't, so it's not like the CSR committee approves and then, that's it. So it has to be based on actual spending. So that is how it is clarified. Okay, one question on Ind AS 116 rent concession. Whether Ind AS, this concessions in leased by lessor, whether that can be charged to P&L. So I think the question, Vijay, here is if there is a reduction in the rent from a lessee's perspective, and this is a Ind AS 116 scenario, from a lessee's perspective, question is whether it can be taken to income, as straight away as a P&L in income, or should it be adjusted to the ROU asset, etc.
Yeah, I believe if it is this agreement, if this addendum is made for the short-term period only,
yeah,
then I believe now the standard also allows you to take into the profit and loss account instead of doing any modification accounting.
Correct.
You can straightway carry that amount into the profit and loss account.
Correct. So there is a COVID-related amendment in 116 that gave you an option that if it's COVID-related concession, then you can take it to P&L. Certain conditions are there, June 2021 tak hi hona chahiye, etc. But that option is there, and many companies, in fact, have taken that. In fact, I think we have a slide. Due to paucity of time, we couldn't take the slide, but I think there are quite a few companies who have actually availed that option. Yeah, here. So there is Mahindra Holidays, there is Wipro, TCS. Many companies have in fact taken this option because that modification accounting is a bit complicated. So ये P&L में लेके काफी लोगों ने other income में लेके गए हैं. That's much more simpler and it's convenient for the company also. Yeah. So I think with that we can. So any last words, Vijay, before we close?
Yeah, no, Santosh. So thanks to you and the Taxman team for providing me this opportunity. And of course, such kind of session will keep, the people busy in understanding what are the issues going on. and what can be the potential solution for that.
Right. Thank you everyone. Thank you for your participation. I think some of the questions were really good. I hope you found this webinar useful. Thank you and take care.
Thank you, everyone. Thank you.
Thanks, Vijay.